All right, well, good afternoon and welcome everybody to the end of day market review for January 11th, 2012. My name is Jason Waugh. I'm one of the trainers and success coaches here with Ideal Trading Lifestyle. I'll be walking you through today's presentation. Now, before we get into that presentation, I am going to ask that you give this disclaimer a quick read. I'll just kind of go over the basics of what we're about and set our expectations straight here. All right, so jump into our agenda. There's a few things that we're going to be covering off today. First off, we're going to be taking a look at the daily news. As everybody knows, this is the first and foremost when it comes to our analysis. There's no point looking down at the individual stocks that make up the New York or the NASDAQ if we aren't comfortable trading based on global market conditions. The next thing that we're going to do is we're going to look at the market outlook. Now, this is going to include analysis on the S&P 500, where we'll be looking for support and resistance levels, as well as identifying the current location of the MACD. There's essentially 12 different places that MACD can be, and depending on where it is going to dictate what type of stocks we're going to be looking at and the level of aggression that we plan on trading with. We'll then move into our volatility indicator, or the fear gauge. This is a tool that we use to help us identify what the rest of the market is feeling and whether or not they're comfortable in the marketplace. Last time I looked, there was only one stock on our basic watch list. If that stock is still up, we'll take a look at it. There was a few picks that we liked from yesterday. Now, one stood out more than the rest, so we'll talk on that for a little bit, and then we'll basically just piece everything together. Excuse me. Piece everything together and prepare for tomorrow. Obviously, this is going to vary depending on what type of customer we are. Basic customers are going to take their tools and they're going to go down one set of rules, while our advanced customers are going to go through a different path altogether. And then finally, if anybody has any questions throughout this presentation, all you need to do is send a chat through in the chat box, and I will be able to answer that at the end of the presentation. Also, if you want to raise your hand, I can unmute your line, and you can ask your question that way. But again, I'm going to request that we leave the questions till the end of the presentation. All right, so I'm going to start things off here by looking at the daily news. There really wasn't a whole lot to see today. In fact, the markets ended up pretty flat. And this was after the S&P 500 kind of just gave its last little hurrah yesterday and pushed it into a 5-month high. Definitely something that we enjoyed to see. It's definitely showing that the buyers are still interested in the market and they're still pushing the markets forward. However, today was a bit of a breather while we were waiting on a couple of announcements with the European news that's going on over there, which is going to dictate whether or not that crisis is going to be wrapped up or if it's going to extend. So right now, people are starting to sit on the sidelines a little bit and in anticipation for some of the upcoming news. More on the local side, we are going through earnings season right now, so you are going to find some of those major bellwethers within each sector are going to be posting their earnings, and they're going to be influencing individual sectors and markets as a whole. So definitely, this is a time to definitely spend time looking around at the local companies. And when I say local companies, I mean anything that resides within the U.S. markets, New York or NASDAQ. We've had a lot of focus on Europe and Greece up until recently. So with that said, we're going to go ahead and we're going to open up the S&P 500 chart. And now that we've had a little bit more of a run here, we can start to be a little bit more comfortable with this most recent line that I've drawn, this rising line here. And what I've done is I've essentially engulfed the trading range that it's in right now. And what this does is it doesn't necessarily say that it's up against resistance and that the S&P 500 is going to stop. It just means that it's going upwards in a very tight range, and there's not a whole lot of fluctuation. When it pulls back, it doesn't seem to be that much, and when it goes up, again, it doesn't seem to be doing so in incredible leaps and bounds. It is still enough to slowly push up into newer highs, which is great to see. But what we're really going to see, what we really want is to see whether or not it's going to break through resistance on the upside and potentially give us a nice trading streak, or if it's going to break down below its support levels and have a pullback of some sort. During that breakout, whether it be up or down, we would likely expect to see some larger movement. Obviously, we would like to see that larger movement to the upside, but this doesn't necessarily mean that we're going to see triple-digit declines. That would typically be reserved when you see that volatility indicator up above 30, and that is a volatile state. But obviously, with it rising, it is showing favor towards the bullish side and favor towards a breakout on the upper side. That said, we are really starting to push into some overbought states with some of our more advanced indicators up at its higher ranges. So we are going to anticipate a pullback. Hopefully that pullback will be nothing more than to some of these support levels that we've identified here. At worst, perhaps a pullback to around 1250, which was a more psychological level of support. Our MACD is rising bullish, black line over the blue line, which is obviously good to see. Moving into the volatility indicator, we have now seen a bit of a rise. I was really hoping to see it break down below 20. Today is not the day. It's not to say that's not going to happen. It's just not going to happen today. What we see is it's at 21.05 versus yesterday where it closed at 20.69. So a little bit of a rise there. Nothing to be too concerned about. Again, we are expecting a bit of a pullback. And all in all, we should just be happy that we've seen this volatility indicator get as low as it has. So this is the gist of the market analysis. What we can take from this is that things have been good, but we are going to expect some pullback. Now, we don't necessarily need to ex-nay on any trading decisions. It just means that if we do find a stock that we like, it needs to be meeting or exceeding the market conditions. We'd really like to see that it's doing that. And we would like to also see that we're being more cautious with our position sizes. Maybe we're trading smaller amounts. Maybe we're going for smaller profit targets if we're advanced customers. That way we're in and we're out, and we're not going to be too concerned if there is that reversal, which we're expecting. So I'm just going to go ahead now, and I'm going to see if we still have anything on our basic watch list. All right, so we do MDCO. All right, so we've got a white candle. We've got a black line which has not crossed through the blue line yet. We could actually see that this black line has not crossed through at all for quite some time here. I would say that it's had a tough time breaking up beyond this blue line since the beginning, middle of October. And that's been with some growth days as well. It does show that there's room to grow to a cycle high, which can be identified right here. We do have our support level, obviously right here. So it's a little bit riskier than we'd like, especially considering the market conditions are the way they are. But our advanced customers, you might be able to bring up some of your charts and salvage some profits out of this. Basic customers, it just might not be the best thing to trade given that it's not meeting or exceeding the market conditions. One stock that we looked at yesterday that looked pretty interesting was WWE. Now, we would have likely canceled this trade today because we saw that futures were opening a little bit mixed or flat, especially considering the stock wasn't fully 100% meeting our conditions, and that was that the MACD was still bearish. Black line was over the blue, but it was showing overall weakness there. So obviously anybody that was planning on trading this is a good example of why we want to keep up and in tune with the market conditions. Today would have been your day where you would have said, you know what, it did look like it was a possibility. I'm going to sit on the sidelines now and say no thanks. Or if at the very least, you would have minimized your positions. And this is something that we don't necessarily talk a lot about, but there's a lot that a trader can do to deal with the varying market conditions. And one thing that we really encourage traders to do is build a system, build a set of rules that you're going to abide by when you're trading. And that means that you're going to have a certain level of aggression and a certain level of confidence in the marketplaces when they're rising bullish. And that might dictate that you trade X amount of dollars. You're going to pull that back a little bit as you start dealing with weaker market conditions. The MACD can be in 12 different locations. It can be rising, flat, or falling, black line over or below 0, and over or below the blue line. So with that said, there's 12 different places you can be, and you can dictate just how aggressive you're going to be in each of those. Beyond that, as advanced customers, you can look at the market conditions and you can say, hey, these are times where I'm going to be going for as much as I possibly can. Overhead resistance, multiple days in the stock. And then you can work your way down to a more conservative level where you're just saying, you know what, I'm getting in, I'm getting out, and I'm taking whatever I can get because the market conditions aren't necessarily as favorable. And even as basic customers, there's things that you can do where you could say, hey, you know what, this stock looks good. I'm going to go ahead and trade it. The next morning, if things are looking a little bit sour, a little bit shaky, you might say, you know what, I'm not buying this many shares. I'm going to cut my position in half. So there's a lot of things that can be done. And the best way to figure that stuff out is through back testing, go through all of your paper trades, see how it's gone from there. Which kind of leads me into a discussion that I had just the other day with some of our other trainers. And we were just talking about what we do and technical analysis. And what we've realized is our disciplines have shifted ever so slightly throughout the years. If I take a look at what I'm doing on a day-to-day basis and compare it to what I was doing in 2009, it's a little bit different. If I compare it to what I was doing back in 2005 or 2006, again, it's actually pretty different. The core fundamentals is all there, but the emphasis that we put on various indicators changes ever so slightly. And this isn't to say that we're a company that hasn't made up its mind. This isn't to say that we don't know what all of the correct answers are, and when we realized that we were making mistakes, we had to change them. Not at all. But the markets as a whole are changing. They're evolving. And as a result, it's imperative that each of us who's using technical analysis, that we're always looking and adapting as the markets change. Right now, global market conditions, global news, opening news and futures, it's a large part of our trading decisions. 2 years ago, it wasn't so much of a big deal. Back in 2005, it wasn't even taught within our disciplines. So what I'm doing here is I'm encouraging you guys to make sure that you guys are always staying in tune with what you're doing. And this is the one thing that I myself take a lot of pride in, and is that as things change, as things evolve, we're there and we're letting our customers, you guys, know so that you guys can start to tweak and adjust your disciplines to deal with the changing market conditions. What we don't want you to do is think that you've learned everything and you can just go on and do your own thing for the next 2, 3, or 4 years and then poke your head back in 5 years later and realizing that we're teaching something completely different. That's not the case at all. You haven't purchased a discipline and you have to buy it all over again if we change it. Not at all. It will change. It will evolve. And being plugged in and always involved with the community is going to help you stay on track with that. All right. So with that said, what are we doing tomorrow? Now, well, first and foremost, basic customers, there's nothing on your watch list that we liked. Advanced customers, there might be a little bit more out there. If there is anything that you like, obviously making sure that you're screening for earnings releases, and obviously you're going to be making sure that you're looking at the opening news and futures prior to the opening bell. It's not a big deal. All you need to do is log into your Ideal Trading Lifestyle homepage by 7 o'clock, and you will see that our website has been updated. It'll say the morning update, and it'll tell you what the futures are doing and what the news is like. Any sign of weakness, we'll let you know, and you can just go ahead and rely on that. If you want to be a little bit more independent, there's a couple of websites. You've got CNBC or FinViz. Just type in anything into Google Finance or Yahoo Finance, and you'll be able to grab the opening news that way. So with that said, I would like to thank you guys for attending today's presentation. Obviously, it has been recorded and will be archived up for your viewing pleasure in the next couple of hours. Have yourselves a good rest of your day. Ciao for now.